Hello, fellow investors and finance enthusiasts. I'm Iggy from Investing Iguana, and today we're diving into a topic that's bound to captivate anyone with some extra funds to invest. Welcome to our latest episode, Maximize Your 30,000 Singapore Dollars, Smart Picks in Singapore's Blue Chip Market. In this video, I will explain to you how to strategically invest 30,000 Singapore dollars in Singapore's thriving blue chip stock market. We'll explore three top-tier blue-chip stocks, Singapore Exchange Limited, SGX, DBS Group, and Singapore Technologies Engineering, STE, and analyze why they stand out as smart investment choices. Whether you're an experienced investor or just starting out, this video will provide valuable insights into making the most of your investment and understanding the potential of these blue-chip giants. So, grab your notepad, and let's unlock the secrets to maximizing your investment in Singapore's dynamic stock market. The joy of having extra cash on hand. It's a delightful predicament that opens up a world of possibilities, especially in the vibrant financial landscape of Singapore. However, letting your hard-earned money simply idle away in a bank account isn't the wisest move. Why? Because inflation, the silent cash eater, is always lurking in the background, ready to diminish the value of your savings. So, what should a savvy Singaporean like you do? The answer is crystal clear: invest in solid, dependable stocks to nurture and grow your funds. When it comes to reliability and endurance through the ebbs and flows of economic tides, blue-chip stocks are the shining beacons in the stock market. Imagine you have 30,000 Singapore dollars ready for investment. Here are three blue-chip stocks in Singapore that you might consider dividing your funds equally amongst, each promising in its own right. 1. Singapore Exchange Limited, SGX, S68. The Singapore Exchange, SGX, is not just a company, it's the lifeblood of Singapore's stock exchange. As a bourse operator, it plays a pivotal role in the financial ecosystem of the country. It facilitates the trading of stocks and bonds, acting as a platform where buyers and sellers can transact. But its responsibilities extend beyond that. It also oversees the movement of derivatives and various other investments, ensuring the smooth operation of the financial market. In the fiscal year 2023, SGX showcased its resilience, akin to a seasoned mariner expertly navigating through stormy seas. Despite the challenging conditions, it managed to increase its revenue by a commendable 8.7% year-on-year, reaching 1.2 billion Singapore dollars. This is a testament to its robust business model and effective strategies. Moreover, its net profit, excluding exceptional items, soared by 10.3% to 503.2 million Singapore dollars. This impressive performance underscores the company's ability to generate profits and create value for its shareholders. In recognition of these strong results, SGX boosted its quarterly dividend to 0.085 Singapore dollars, further rewarding its shareholders. Looking ahead, CEO Loh Boon Chye envisions SGX as a burgeoning multi-asset hub. He sees potential growth in its FX franchise and over-the-counter trading volumes, both of which have been witnessing record performances. This vision aligns with the broader trend in the financial industry towards diversification and the offering of a wider range of asset classes. The Singapore Exchange, SGX, being the only stock exchange operator in Singapore, holds a significant position of power and influence in the financial market. Its performance in the fiscal year 2023 is commendable, demonstrating its resilience and adaptability in a dynamic market environment. This is evident from an 8.7% increase in its revenue and a 10.3% rise in net profit, excluding exceptional items. The decision to increase the quarterly dividend is a reflection of the company's robust financial health and its confidence in sustained growth. This move is likely to be well received by shareholders, as it signals a positive return on their investments. As we look ahead to 2024, SGX's strategic focus is on transforming itself into a multi-asset hub. This is particularly noticeable in its successful foreign exchange, FX, franchise, and the growing volume of over-the-counter trading. These areas represent significant growth opportunities for SGX and position it well for continued success in the future. The anticipated increase in revenue and dividends, which is subject to earnings growth, paints a positive picture for SGX's future. It suggests that the company is on a growth trajectory and is expected to deliver strong financial performance in the coming years. This outlook is likely to boost investor confidence and contribute to the company's market reputation. In summary, SGX's unique position, strong financial performance, and strategic focus on becoming a multi-asset hub suggest a bright future for the company. 2. DBS Group, SGX, D05. DBS, the largest bank in Singapore by market capitalization, is a comprehensive provider of a wide range of financial services. It offers personal and corporate banking services, bancassurance, and investment opportunities, making it a one-stop shop for all banking needs. The bank's performance in the third quarter of 2023 was exceptional. In the first 9 months of 2023, DBS saw a significant increase in its total income, which rose by 27% year-on-year to reach 15.2 billion Singapore dollars. This growth was driven by a substantial 46% increase in net interest income, highlighting the bank's effective interest income strategies and the favorable interest rate environment. DBS's net profits also saw a robust increase, surging by 33% year-on-year to 7.8 billion Singapore dollars. This surge was buoyed by rising interest rates, demonstrating the bank's ability to capitalize on market conditions to boost its profitability. Reflecting its strong financial health, DBS increased its interim dividend to 48 cents per share, which was 33% higher than the previous year. This generous dividend payout signals the bank's confidence in its financial stability and future growth prospects. As we move into 2024, DBS's robust financial performance and strategic initiatives position it well for continued success. The bank's focus on providing a comprehensive range of services, coupled with its ability to effectively navigate the financial market, suggests a bright future ahead. The decision to raise the interim dividend is a testament to the bank's strong financial health and its confidence in its future growth prospects. This move not only rewards shareholders but also signals the bank's positive financial outlook. As we look ahead to 2024, with interest rates expected to remain high, DBS is well positioned to benefit from continued improvements in net interest margins. This is likely to contribute positively to its financial performance. Moreover, the bank's strategic focus on wealth management fees and car spending to sustain fee income indicates a well-rounded and strategic approach to revenue generation. This, coupled with CEO Piyush Gupta's cautious yet optimistic approach towards loan growth, suggests a balanced strategy for navigating the potential challenges of 2024. In summary, DBS's strong performance, strategic focus, and robust financial standing, combined with a positive economic outlook, suggest that it is well positioned for continued success in 2024 and beyond. 3. Singapore Technologies Engineering Limited, SGX, S63. STE, a leading player in the engineering and technology sector, caters to a broad spectrum of customers across various industries such as aerospace, smart city, defense, and public security. Its diverse portfolio allows it to serve a wide range of needs and requirements. In the third quarter of 2023, STE continued to demonstrate strong growth in its top-line figures. During the first 9 months of 2023, the company saw a 12% increase in its revenue, reaching 7.3 billion Singapore dollars. This growth was contributed by all segments of the business, indicating a well-rounded performance across the board. The commercial aerospace division stood out with a remarkable 30% increase in revenue, amounting to 2.8 billion Singapore dollars. This significant growth can be attributed to the recovery of the air travel industry, which has been on an upward trajectory. Furthermore, STE's impressive contract haul of 11.7 billion Singapore dollars for the first 9 months of 2023 has significantly strengthened its order book. As of September 30, 2023, the order book stood at a robust 27.5 billion Singapore dollars, with a substantial portion set for delivery within the year. This not only reflects the company's strong market position but also provides a solid foundation for its future growth. The growth of the commercial aerospace division is particularly noteworthy. This growth, driven by the recovery in air travel, highlights the division's adaptability and its ability to capitalize on favorable market conditions. The company's substantial order book and the acquisition of new contracts suggest a strong pipeline of projects, indicating potential for sustained revenue growth into 2024. This robust pipeline is a testament to the company's market position and its ability to secure new business opportunities. The declaration of an interim dividend also reflects the company's confidence in its continued profitability. This move not only rewards shareholders but also signals the company's positive financial outlook. STE's diverse portfolio and its presence in various sectors, ranging from aerospace to smart city solutions, position it well to capitalize on a broad range of market opportunities in 2024. This diversity allows the company to tap into different markets and customer segments, thereby enhancing its growth prospects. In summary, STE's impressive growth, robust project pipeline, and diverse portfolio suggest a promising outlook for the company in 2024. And that's a wrap on our journey through Singapore's blue-chip market, exploring how best to invest 30,000 Singapore dollars. We've delved into the unique strengths of SGX, DBS Group, and STE, and how they offer promising opportunities for your investment portfolio. Remember, smart investing is about making informed decisions and staying abreast of market trends. If you found this video informative and helpful in guiding your investment decisions, please hit that like button and subscribe to Investing Iguana for more insightful financial content. Don't forget to share this video with fellow investors who might benefit from these tips. Your support helps us continue to provide valuable financial insights and market analysis. Stay tuned for more investment strategies and tips, and until next time, keep investing wisely and maximizing your financial potential.